Hello, this is Anders. Welcome to my market analysis. This analysis will be preparation for April 19th, tomorrow. First of all, this is not financial advice. You can lose all your money investing. Always talk to a financial professional before risking your own capital. This is for educational purposes only. Okay, let's look over the important events for tomorrow. So, at a quick glance, we're looking at the United States flags, and I don't really see a lot of big events happening. The biggest one we have is probably going to be the API weekly crude oil stock. So oil stocks will be in play tomorrow. Yeah, and we also have earnings continued. We have a long list of earnings names reporting tomorrow morning and tomorrow afternoon. We'll look over those tomorrow. First of all, let's do a market analysis. At a big picture, we're looking at the SPY. We went up, broke out of this rising wedge, and we hit my risk reward target line, which is basically a target I found for people who invested in the stock market when it broke out of a long consolidation. So the risk reward, if it broke down, they would only lose 1/3 of what they would gain from here, and this is this line. As of now, we're still finding support above this trend line. We need to see this break for it to be any more downside. As of now, it looks like we're going to have more upside. Looks like we're up in post-market too. We'll see if this level holds or if it breaks. If it breaks, we're looking at more upside in the market. This morning, I showed you this trend line of X that was broken. It broke, it flushed to the upside, and then it was sold off right after. And it looks like it closed underneath the trend line, to my big disappointment. But we'll see if we can see any continuation afterwards. If not, it looks like another fake out, and we might see lower levels if this happens. This looks like it is on par with what the market is looking like in general. Today we actually had an up day in the US 10-year yield. We're looking at this because the crushing debt that is going on with the United States, and it scares the market, especially the tech sector, if we see a growth in this. You can see how it is forming this downwards trend line, hitting some sort of support down here. If it breaks the trend, we might have to expect another sell-off in the QQQs, also known as the tech sector. Next up, I want to take a look at oil. This is crude oil, and we broke up out of the flag. We're just consolidating above it. We're trying to see, I'm curious to see if this is the actual breakout or if this was just a play from options X and bigger investors just playing with the oil market. But we'll see. The IWM is the IPO for the Russell 2000. So a lot of the smaller stocks in the market looks like they're forming a head and shoulders, which is the weakest sector or the weakest part of the market. Even a little bit down in post, not a lot though. Again, I see a head and shoulder pattern shaping here, but I'm not gonna use it as a trade before we actually break this green level. Moving on, let's see the QQQs. We're talking about the US 10-year yield, how they had an up day today, like it's on par, they're having a down day, or they had a down day today. If we see continuation, it looks like it's consolidating. If this breaks down, I think we're going to have to come back and retest this prior resistance as new support and see if we can get a higher high. If this breaks though, watch out because we have way lower levels to go. Let's take a look at gold. I know that a lot of bigger investors have been calling this out. and it's really easy to see why. We've had this longer term downward trend that we just broke out of, and when we have the US market or the United States continuing to print money, um, people will flock to gold and silver. The physical market is experiencing high demand right now. It's only going to be a matter of time before the digital market catches up with them. Next up, let's take a look at what Bitcoin did today. We had a sell-off yesterday, and I was expecting it to hold these levels. We had another small sell-off in Bitcoin today, and looks like we actually got bought up, and it's still holding, which is positive for the cryptocurrency market. Again, I don't expect any extreme high prices from here. The highest I'll go is like 80,000, I think, before we see another 2 or 3 year correction like we have been experiencing for a while. Next up, let's look at XRP. XRP also selling off a little, but again, should be expecting these levels to hold. If this doesn't hold, I think we'll drop down to either one of these levels. There's a lot of support in here. I have heard a lot of good investors, in particular BC Backer, call out the 80-cent level because it was a prior resistance, a multi-year resistance, and needed to be back tested. We don't have to go all the way down to back test it, but if we can find support some place here, we'll continue on with this bull market. Very bullish on XRP. Let's take a look at ETC. It's another cryptocurrency that I like simply because it's so far behind all the other cryptocurrencies, and it's always been taken apart in the bull markets that has been happening. It looks like it actually found support on this red line. I put this red line in because it's the 0.702 Fibonacci retracement. It broke through it like butter, and it is now back testing it, which for me suggests way higher prices. I have an alert set. Hopefully, we'll see if we can get into the triple digits at some point before I'm hoping to let go of some of this. Last on this list today is going to be the DXY. DXY is the dollar index, and it sold off hard. I think we looked that over this morning, but that is not a good sign for the US economy short term, because all the dollars that the businesses have collected is now worth less in comparison to the rest of the world, meaning that they have to pay more of them to get product that or material to use to build other products. Okay, after looking through that, we're going to look through different sectors just to get an idea of what's happening here. First off, we have the XLX. In XLX is technology, so it should be looking up about the same as QQQs, which it does. Up here it's forming some sort of support, but it's not really looking that bullish to me. It's looking more insecure. So we're going to have to see what the 10-year yield does tomorrow. The XLY is the consumer index, looking a lot the same. So the reason why I'm going over these is because we have all of these different sectors that are moving up. So normally in a healthy market, you will have some sectors be moving up higher than others, so that their tops will be timed differently, so that investors will move from sector to sector to get the better prices, and make money that way. But the way that we see now, it looks like all of the sectors are making new highs. So we can see from what we're expecting in the future, we're expecting the market to drop, which makes sense given that all the sectors are basically at all-time highs, even though they have not performed that well after the after the coronavirus hit the world. So some of these sectors, in particular the technology sector, have been performing well, but not as well as the charts are showing. Looks like we actually have a trend line here that is holding. If this breaks tomorrow, we might see a flush of money coming into it. Okay, consumer staples. Let's keep that in mind for tomorrow. Here. Okay, the XLRE is also getting up to all-time highs. Might be, that's real estate. Might be a level to watch out for. The XLB is oil. No, it's materials. Materials also at an all-time high. XLE is oil. That was my bad. And I'm actually looking for this short. We have a break of the upwards trend line. We also had almost like we had a fake out, made it back, and today it actually tested that support again. I'm really, really excited to see what happens tomorrow. Post market, it actually is up, but we'll see if it can break this last support for break all the way down to below 40. And the finances are doing well. They're also at all-time high. So to sum up, let's sum it up. All the sectors are way overdue for a pullback. We have gold breaking out of a trend line, showing us that it will make higher highs. We have the IWM with the head and shoulders pattern that potentially could play out. We have the US 10-year yield going up. We have cryptocurrencies topping out. We have DXY falling down. All in all, the fundamentals of the market are terrible. But as long as the market won't sell, it's going to continue to float up. I'm not expecting this to happen or this to be happening for a long time. Very soon, this chart will be looking a whole lot different than what it does now. And hopefully we can get to the targets that I have planned out on the short side. But all we can do now is wait and see. And I'll catch you tomorrow morning when I go through a live view of all the stocks that we need to be looking at tomorrow. Thank you for watching.